Welcome back once again to this channel. I am Nina Official, and here I publish content capable of helping a trader to grow positively and improving the trading activities. Before now, I have dropped part 1 video on how to confirm your entries before taking a trade. I've talked about change of character. If you have not watched it, you can move down to my channel, get the video and watch it and understand it. I have made a part 2 of this video and I covered the use of pin bar as a confirmation entry. I used the bullish pin bar as an example. So in this video 2 part 2 of this candle formation as confirmation entries, we will be moving down to number 2, which is engulf. So I'll be scrubbing off the number 1. We have covered pin bar. Don't forget, I gave you the bearish pin bar as your assignment. As an intentional trader, by now you should be able to make use of pin bars to have confirmations for your trades and setups. So we'll be moving down to number 2, which is engulf. So when we talk about engulf, we have bullish and bearish engulf. And in order not to make this video too long, I'll be covering just one as example, while you use the other one as assignment. So let's cover bullish engulf. So we move straight to the chart. Now don't forget, like I said earlier in my previous video, I said candles are the language of the market, and if you're able to interpret what a candle is saying, you'll be able to know what exactly the market is also saying. And understanding what the market is saying simply reflects what the next opportunity is going to be. If you see a candle and the information market is telling you is not given, it means you can run. It's either you run or you stay or you grab the opportunity. These are the information embedded inside a candlestick. Now when we talk about engulf, just like how the English sounds, engulf simply means something is enveloping a previous thing. Engulf simply means enveloping something bigger, something covers. That is engulf. Now when we say bullish engulf, it simply means a bullish candle engulfed something. And when we come to the market, how many people do we have in the market? It's only the buyers and the sellers. So when we now say bullish engulf, it simply means the bulls, which is the buyers, engulfed the sellers. That's a bullish candle engulfed a previous sell candle. So now when we talk about engulf, 2 candles are involved, a sell candle and a buy candle. But then the buy candle is bigger than the sell candle. That is simply engulf. Unlike the pin bar, when we say it is a single candle, the engulf is 2 candles. It comprises of 2 candles, the bigger one and the smaller one. And when we say bullish engulf, it simply means a bullish candle is bigger than a previous sell candle. That's the literal meaning. Now let's go on the chart and see what this looks like. Now let's look at this structure very well around here. If you look at this area, carefully look at this area. What can you see here? Engulf are always 2 candles that are close to each other, 2 candles that they gum each other, but one is bigger than the other. The one at the front is bigger than the one at the back. That is engulf for bullish. Now this is a bullish engulf. Why? This is the first candle behind, and this is the second candle after it. The next candle that was coming after it is a buy candle. This is the sell candle at the back, and this is the next candle that formed, which is a buy candle. Now if you look at these 2 candles now, which one is bigger? Of course the green candle is the bigger, which is the buy candle. And because it is bigger and it enveloped, it engulfed the sell candle behind it, that's why we call it a bullish engulf. A bullish engulf. And the fact that the engulf, the momentum, like that engulf simply means it came and it was bigger than the previous candle. It came and it was bigger than the previous candle. That hugeness is already a signal to tell you that this one that have already come and is now bigger than one that is there before, it is now trying to tell us that, hey, the market might continue pushing. The market might continue pushing. It's simply to tell you that the momentum has entered into the market and there is probability that the buyers will continue to, take the territory. That is what it means. Now, two candles are involved. The previous, which is the sell, and the one that followed it, which is the buy. And as you can see, the buy candle is enveloping the red candle. That's why we call it a bullish engulf. A bullish engulf. The buy candle is bigger than the sell candle. That's why we call it a bullish engulf. Now, how do you turn it into a trade opportunity? How do you turn it into an entry confirmation? Already, seeing a bullish engulf is a confirmation that the buyers are going to be buying for a while. So now, where is your entry? Once you get a confirmation, the next thing is to draw out your entry. Don't forget, in my previous videos I said I'll be making use of 50% of candles and it has been working for me. So I don't go below 50%, except the candle formation is quite big. I can refine down to 30% or 20% to minimize my risk. Now, when looking at this candle formation, the bullish engulf is quite big enough. If I say, let me put my 50% here, and then a little pips low, it's quite big, right? But it is still accurate. It was big. But then, ideally for me, the engulf was quite big. I'm going to refine to 30%. So my 30% will be around this area. So that's what I'll be waiting for. I'll wait for market to come back and retest. What we call it is a retest. I'm simply waiting for market to come back and retest this bullish engulf and then take me and go. Ideally, if I'm taking a day trade, I used to go for 3%, which is 3 RR. I go for 3%, which is 3 RR. But if I'm taking my swing trade, my TP is always where I said it is. For a swing trade, you should have your technical TP. So my technical TP remains. But if I'm on a day trade where I have to enter the market and leave sharp, I always go for 3 RR, which is 3%. So here is my 3%. My 3% around here. So let's see what market did. Did market tag us or it didn't? So if we extend this, so what can we see? Market actually tag us if we measured it very well. So if we actually divide this bullish engulf into 3, we should have something more. So let us assume this is our 30%. But don't forget, I didn't mean we left it at that 50%. We know market has already tagged us in. But being that the zone, the engulf was too big, that's why I had to refine it to get a smaller zone. So most time when you are refining to get a smaller zone, one of the disadvantages, market might leave you. Market might not tap you because your zone is too small. But once your zone is, minimal, not too big, not too small, you have the high chance of, getting picked by the market and then you take your profit. So let us assume this is where we have our zone. Now, coming to this area now, markets kept having pullback, creating liquidity, ranging, and then eventually it tagged us in at this area. And it even tagged us in with a pin bar, which is to tell you we are good to go. Another confirmation again. Now market tagged us in, and then at this level, I had my 3RR smashed. So that's a good trade. That's a good trade. Now, for those that already understand how to make use of their pin bar as a trade confirmation, already seeing this, you should even know it is another trade opportunity. People like me, what I will do is come here, take the 50% again, simply wait for market to come and trigger me. So I am already having a second position on just one setup. So what am I waiting for? Expect market to come, and then we test the pin bar, my SL below the low, and then I take my 3RR. It's as simple as that. In fact, this one played so fast, my 3RR was taken around this area. So altogether, I have 6RR on this single trade. And as you can see, if you wanted to take more, if you already observed the structure of the market and it's very, very trendy and you wanted to take more, you can see the market did a whole lot around this area. Markets went up quite long. So we have up to 10RR on this single trade. So that is how to make use of engulf as a trade confirmation. Now, should you enter every bullish engulf that you see? The answer is no. So where exactly should you be taking the engulf? You take engulf when they appear at a key level. So what are key level? Key levels are your supply zones, demand zones, support zones, resistance zones, FVG areas, and breaker blocks. These are your major key zones. And whenever you see the bullish engulf prints at those key level, watch out. Take your 50% and enter your trade. Now let's look for a key zone as example. Let's get a key zone as example. So we are looking for a bullish engulf. So now we have, this is a bullish engulf around this area. Let me mark it. This is a bullish engulf. Why is it a bullish engulf? As you can see, the bullish candle was bigger than the sell candle. So that's why we call it bullish engulf. Okay, first of all, the key level is what we are looking for, right? Sorry. So now key level, we are looking for a demand zone. So now this was a previous demand zone here. This is our break of structure. And we were left with a demand zone behind. So this is the demand zone. This was the demand zone around this area. And then what are we expecting market to do? We wanted to buy from this area. This is our demand zone. We wanted to buy from this area. So now what are we waiting to see? We want to use candle pattern as a confirmation entry. Now, once market taps into the zone, we watch out the type of candle that was printed. And now market had a pullback and then tapped into the zone. So what did we see market formed? So at this area now, market did not form a bullish engulf, but what we have is a tweezer. So I don't want to deviate from the purpose of this video. Let's look at where markets mitigated a zone with a bullish pin bar. Let's look for it for the purpose of this video. Alright, so we have one here. So this was a break of structure around this area. And we had our demand zone like this. People like me, whenever I'm marking out my zone, I leave few pips down. So this was our demand area. So we are simply waiting to see what market we do at this level before we enter the market. Now, ideally, if you are the type that is not waiting for confirmation, you can see that market came and swept the zone with a wick. Market came and just took out the stop losses of the buyers before reversing. So that's the essence of waiting for confirmation. So the candle will tell you what to do. Market has already tapped, is not giving you a go ahead. You simply wait and see what the market will do. But then at a point when market was reversing, we can see what happened here. So what happened here? Market printed a red candle first of all, and then the next candle we saw was what? A green candle. And when you look at the two candles, the price actions, the buy candle price action was bigger than the sell candle price action. Now that makes the buyers to be enveloping the sellers. So looking at these two candles now that is still inside our zone, we can see that the buy candle was bigger than the sell candle. So that makes it a bullish engulf. Now, where is our entry? Our entry is 50%. Don't forget, that's all I advise. So we take our 50% around this area, and then we are waiting for market to trigger us. Now, did market came to retest our 50%? Of course, yes. This is the retest. Let me mark it. This is a retest. This was a retest. And then you place your long position. Then your SL slightly below the low. So if I'm going for my regular 3-hour route, this was my 3-hour around this area, and market smashed it. So how much did market created before finally reversing? So market got here before reversing again, and it gave us 5 RR. That's a very good trade. You can see how it played out. At a key level, a bullish engulf formed, and we took our entry at the 50% of the bullish engulf as the trade opportunity and confirmation. Our market respected it and gave us maximum of 5 RR. That's a beautiful trade. So guys, that's how to make use of bullish engulf as a confirmation for a trade entry. So whenever you have your setup, you want to use confirmation, simply leave it, watch when the market will tap into the zone, look at the candle it forms. If it gives you a bullish engulf, you simply take the 50%. You are good to go. And that brings us to the end of this video. In my next video, I'll be talking about the number 3, which is the tweezer type of candle. Now, I use the bullish engulf as example for you guys. You can go ahead and use bearish engulf to practice on the chart. As an intentional trader, you don't just watch videos, you don't just listen to people teaching you. When they are done teaching you, go back to the chart and practice. Forex is all about the theoretical aspect and the practical aspect. If you want to go far, once you learn, go back to the chart and practice. That's how to become great as a trader, and then it helps you to stay positive and profitable in the long run. So guys, this brings us to the end of this video. Don't forget to subscribe to this channel, like, and also share this content. Thank you, and I will see you in my next video.